Hi guys, good morning. I'm Alejandro Hernández from IOActive, and today we will go through historical correlations between security issues versus stock prices. About me, I'm from Chiapas, Mexico. I do work for IOActive. I also like a bit of economics and finance, and recently I have reached both topics with cybersecurity. In 2018, I presented at Black Hat USA my research on security problems on trading technologies. But today, I won't talk about technical stuff. Instead, we'll go through security problems and how do they affect the stock prices of companies. We'll go through vulnerabilities, incidents, sabotage and espionage issues, privacy, and other interesting factors. In the end, we will have some conclusions. First, let's start with the butterfly effect from the chaos theory. It's well known that the flutter of a butterfly's wing can cause a typhoon on the other side of the world. This concept could be taken into the supply chain. For instance, what do avocados, the NFL, and the monarch butterflies of Mexico have in common? Well, the Super Bowl is one of the most broadcasted events, and people demand tons of avocado, but particularly from a specific part of Mexico, in the central lands. So the people and even drug cartels realized they can make a lot of money with avocado, so they started to deforest the forests where these butterflies live. Also, the government have found many dead people, particularly activists that defend the butterflies ecosystem. This could be taken to the supply chain, right? All the companies are connected to create final consumer products. If there is a disruption in the chain, this will affect the next companies. There are many public companies scattered in this mesh. Now, what affects the stock prices? There are many things that could affect the prices, such as economic factors, political, demographics, natural forces, and cybersecurity related problems, which is the topic of today. Now, first of all, this is a disclaimer to let you know that attribution to security incidents versus stock prices is not easy. For instance, the same day a security problem is reported or made public, the same day could be economic problems in a country or could be political problems, and all the stock indexes would fall and will drop the entire market. So it's hard to attribute particular security incidents to the price, right? And the second thing is, this research was entirely based on technicals, which are short-term. In order to see the real impact of a security problem, we must go to fundamentals, which are mid to long-term, because the losses are quantified in the quarterly or annual reports. And there are, costs of fixing the problems, incidents response, recovery, disruptions in operations, regulatory fines, insurance, and etc. Now, let's start with vulnerabilities. You probably remember the meltdown and Spectre bug in the microprocessors, in Intel, for instance. So, by January 2018, these bugs were reported. The stock price dropped minus 3.3%. However, the sell-off continued for the second day because of the impact of the finding, as you can see here. But 2 weeks later, on January 25th, Intel reported earnings and they beat the expectations. So basically, Wall Street entirely forgot about the vulnerabilities and the stock price continued to go up and up. Now, Zoom video communications. Probably you remember a vulnerability that allowed people to to join calls. Since it was amid the pandemic, again, Wall Street and all the people didn't care about the impact of these security vulnerabilities, as you can see in the graph. There is a small red candle here, but the price skyrocketed because of the pandemic. Also, it's important to see that vulnerabilities impact differently according to the sector or the industry. It's not the same a vulnerability in a software product than in a car, in the autopilot software, which is that happened in Tesla. Basically, the price dropped more than $100 in 2 days, which is a lot. You can see this red candle minus 6.88% because of the flaw in the autopilot software. Now, when it comes to incidents, let's see the Taiwan Semiconductor drop. Basically, there is a virus outbreak that hit their factories, and it was by Friday, but by Sunday, 80% of the equipment was back online. As I said before, the fundamentals reflect the real impacts of these problems, such as this one. This problem will affect the revenue by 3% and the shipments will be delayed. But in the short term, we will see by Monday a small drop of minus 1.49%, but still the price went up. The infamous Equifax breach. Basically, the stock fallen more than 38% to the lowest levels after the breach. Many people, we thought that the company would never recover or it would take years to recover. You can see this massive sell-off, minus 38% to the lowest level here. Nonetheless, 2 years after, the company was back to the price levels prior the breach and continued to go up. So it's interesting to see how companies recover of these massive breaches. The Home Depot case, we'll see that this was prior 2015, and it's important to say that because later I will explain some insights I saw. Basically, 56 million cards were compromised in this breach. Nevertheless, the price went up and up and up. Wall Street didn't care. Anthem. As you can see here, the investor didn't care about the millions of registers stolen because these companies, this sector had the help of the Affordable Care Act. Basically, Wall Street didn't care again on these breaches. Most recently, for instance, Garmin, last year, apparently they paid multi-million dollars to the attackers because they injected ransomware. Also, they had their services offline for several days. There were many people on Twitter, on social media, reporting having problems with their watches. And we can see a minus 3.45%. But as you can see, again, the stock went up the next month. But it recovered quickly. In 5 days, you can see this candle here. The price was above the original levels. The FireEye case, you are very aware of this. This is a fresh hack. This was the first company who realized there was a nation state hack, and the company dropped minus 13% that day. Then you will see this massive green candle the next week, and I will tell you why. FireEye reported that it was not their fault. It was something bigger. And something bigger is the SolarWinds hack that affected many companies. When SolarWinds reported it was their fault, a backdoor in their software, many cybersecurity companies, the names like FireEye, Okta, Tenable, Qualys, CyberArk, the entire industry, the entire sector was up because many companies were about to invest more in cybersecurity, were about to buy more products. Hence, the price skyrocketed, including FireEye. As you can see here, it went to the sky. Now, if we speak about espionage or things related to the national state security, we will see the case of SolarWinds. The company fell minus 40%, almost minus 40% in that week. That was a massive drop. However, as of March 26th, we have an almost 19% recovery from its December lows. The company is recovering. How much time it will take, we don't know. Probably it can take 1 year or 2 years as Equifax, we don't know yet. Another example here, the Supermicro Computer Inc. Do you remember probably the allegedly chips with the spy chips? Well, that day the company dropped minus 41%. After the company released a press release saying it was false, etc. And you can see the price. Many people made a lot of money here with this massive recovery. But that day, minus 41%, that's a lot. The Saudi Aramco attack with drones, the company was not public yet, but impacted in the IPO, for instance. They have to delay the IPO. When it comes to privacy, the best case is Facebook. There are multiple cases. This was in early 2018 with the Cambridge Analytica scandal. We see minus 17% or something like that in the next days. But again, you see this. See how quickly they recovered in the next months. In December that year, a few months after, again, there was another privacy problem with Facebook. The company that they lost minus 7.25% of market cap. But again, see this V-shaped recovery. And this part is just about misleading information, how people trust on social media or they get confused. It's not strictly related to cybersecurity, but I think it's something important and funny to say. In this case, Cisco was not buying FireEye, contrary to the rumors. FireEye went up almost 4.57%, but after Cisco said it was not buying it, it dropped. The PGP case, you know PGP, the encryption software. Well, they have a critical flaw in 2018. And the problem here is that many people start using the dollar sign on Twitter and on other social media. Automatically people got confused, but the PGP ticker doesn't have to do anything with the encryption software. Instead, it's a different company, PIMCO Global something. The stock price dropped, the people realized and went up again a few minutes after. Zoom with double O versus Zoom ZM without O's. Zoom Technologies is that it was a tiny company from India, a penny stock, and Zoom is the software we use for video communications, right? Prior the IPO, people went and bought the other stock. And the stock was 56,000% in 1 month. One day, people realized it was the wrong stock and the price tanked. Last year, amid the pandemics, with the coronavirus crisis and the Zoom mania, this is something people call a financial dyslexia. People get confused. With this mania, sent the stock price again of the wrong company to the sky. The day after, they realized and they dumped the stock. Many people lost a lot of money, but many others made a lot of money here. Now let's answer some questions. Do issues in subsidiaries impact to the parent companies? Let's see, the Verizon case. Basically, they agreed to purchase Yahoo in July 2016. However, they bought it until June the next year. However, in between, on December 2016, there was a data breach in Yahoo, and you can see a red candle here in Verizon's stock price. So yes, there are impact in parent companies. WhatsApp, a critical bull reported, and we can see a minus 3.61% drop that day on Facebook price. So yes, the impact also affects the owners of the companies, or in mergers and acquisitions, the price affect both. Now, in the supply chain, do issues impact other companies? Let's see again the case of the Taiwan Semiconductor, which is one of the biggest manufacturers of chips in the world. They supply components to AMD, Apple, Nvidia, etc. So when the virus outbreak on their factories, we'll see this small red candle that day. Well, as far as I remember, it was Monday. This is Apple. You will see the uptrend here. However, there is a red candle here. AMD, you will see the uptrend. However, there is a small candle here. Probably it's a coincidence or not, but by common sense, the news were mentioning Apple, AMD that day. Now, this is the most important part of the talk. Impacts per issue type, per term, and per sector. Take a look at this at the next slide. With this, we will answer some questions such as, are certain security issues like vulnerabilities or data breaches more impactful? Are some sectors more affected? And do companies recover, and how quickly they do it? The white cells are vulnerabilities, the others incidents. We have the company names, the sectors, industry, the details, the date, and in the last column we have the number of days they recovered, which is how many days has passed after the price go back prior the vulnerability or the incident reported, right? So, as you can see, the changes on the price, many of them are small, less than 4 or 5%. 4 of them are even positive. That means that Wall Street didn't care about the vulnerability reported, right? And those who were affected, they recovered most of them in less than 1 month. In days, in a couple of days, or in 10 days. Unlike the incidents, for instance, these two in the health care sector, they had a ransomware attack. They recovered in less than 1 year. However, this other slide full of incidents, data breaches on different sectors, you will see drops in the price. Nonetheless, they recovered in less than 1 month. as you can see here, the dates. In a couple of weeks, in 2 or 3 days. Now, as I said before, things related to sabotage, espionage are more impacted, as you can see here in the stock prices. Minus 41% in the case of Supermicro computer, or minus almost 40% in the recent SolarWinds hack. When it comes to privacy, you will see also big drops, minus 17%, minus 13%, and the recoveries, they depend, of course, on the impact of the hack or the problem. We still don't know when SolarWinds will recover, probably in less than 1 year. It looks like less than 1 year. If you see the graph I shown below before, the recovery of SolarWinds is like 30% now from its lowest levels, if you see the gap. Now, the impacts, the key points, vulnerabilities, they do not impact as bad as we thought. They have low impact, less than 4% drop, and they recover quickly, less than 1 month. 40% of my observations, they didn't impact negatively in the stock price. Instead, they went up and up. Unlike the incidents, they are more impactful than vulnerabilities, more than 5% in average. And the recovery, of course, depends on the amount and the sensitivity of the data leaked. 63% of my observations, my cases, recovered in less than 1 month, even when card data and personal information was leaked. Now, security problems versus national security or politics. In the case of Cambridge Analytica, for instance, or the spy chips, we will see bigger impacts, 15% drop or above. Now, data breaches. The finance sector is the most impacted, particularly the ones related with payment processing or credit and debit cards. And also the healthcare sector is the least impacted. So what does it tell us? Basically, investors, traders, Wall Street care more about money than people's health. I don't know. Overall, in general, of all my observations, 50% of them recovered in less than 1 month. Most companies recovered in less than 1 year. And the ones that recovered in more than 1 year were Equifax and GPN, Global Payments. Now, do you remember the case of Home Depot, which was in 2014? Well, all the older data breaches before 2015 didn't have a sharp price drop, and they recovered in less than 1 week. We can say names such as Sony Pictures, Target, JP Morgan, PJX, Anthem, eBay. Why is that? In my opinion, I think it's because before 2015, cybersecurity or data breaches, etc., were not too mainstream as those topics are today. Nowadays, investors and people are more concerned on their security of their credit cards or their personal data or their health data. That's just my conclusion, right? Now, who makes money? Profit and losses. One of the cases are short sellers. For instance, this case is interesting. The firm Moody Waters, which is a short seller company, they released a report with security vulnerabilities in St. Jude Medical's device, but they did it in a very irresponsible way. This is what many short sellers do. They basically release the report to the internet without letting the companies know about it. So they have a short position and they make money if the stock price drops. Also insider traders, which is super illegal, of course, like in the Equifax case. Some traders knew about the problem and they sold their stocks prior it was made public, right? Probably they're going to jail, I don't know. People like us, retail traders, we can buy the effing dip. The other day with the Garmin vulnerability, for instance, I saw the drop, I was doing the research already, and I thought, all right, according to my observation, this couldn't be dropped below 6%, for instance. So I bought at minus 4.5% or something, and the price rebounded. So I made some profit with it. I have made some other trades using this statistical analysis, and most of them worked. For instance, in the case of SolarWinds or in the case of FireEye, I bought both of them, and initially I was losing some money, but in the end I just waited. I converted them into swing trades. For instance, the SolarWinds hack, I waited for 2 months now, but I already have positive profit in the recovery. Who loses money? Companies, of course, with their market capitalization. They also lose reputation, the social sentiment of the people, right? And people, our pockets are affected. We also could fall into margin calls with our brokers. And I will leave you these 2 articles for companies, which are recommendations against what we've seen before, on how you can assess your supply chain to enhance resiliency, how you can continually test your products and services, and other things you can do to improve your cybersecurity. For the investor, stay alert with the price changes of your companies. Stay updated with the news, either in a sector, in your country, or worldwide news. And also set stop loss orders in case of, surprises. Conclusions. In general, security issues impact negatively on stock prices. We've seen that, but they recover quickly, in less than 1 month, in less than 1 year. And this was our first approach. We need more data to get more accurate results. And remember, this was entirely based on technicals, not fundamentals. Probably this would be another interesting topic to discuss in further research. And thank you so much for your time, and any question is more than welcome. I will try to answer it. Thank you, guys.